Welcome to the Accountants Exposed podcast, where we create light bulb moments for our listeners by exposing the journeys, secrets, and insights of some of the top players in accounting. This podcast is brought to you by Michael Edelstein, Director and Founder of Recruitment Expert, a specialist accounting recruitment agency working across Australia, New Zealand, and Asia Pacific. Ladies, gentlemen, and accountants, I'm excited to have Steve Meyn on our podcast. Now, I've known Steve for many years as the Managing Director of Lawler Partners and PKF. And after 30 plus years in the business, his enthusiasm for the industry and passion for helping clients never ceases to amaze me. But one thing I've always respected about him is his openness, authenticity, and most of all, his humility, despite his wealth of knowledge, experience, and plenty of success. Steve is one of the most respected leaders in the industry and is held in high regard by many of his peers. And today, you have the opportunity to listen and learn from his 30 plus years of experience. Also, make sure you get your tickets to the Accounting Expo in Sydney next week, held on the 28th and 29th of April, so you can get your dose of CPT hours, listen to amazing speakers over 2 days, including moi, and learn something new. So, go get your tickets ASAP, and for all the cheap passes, me included, don't worry, they're free, and I look forward to seeing you there. There's a link in the show notes to help you register. Hi, Steve. Welcome to the Accountants Exposed podcast, and thank you so much for joining us today.
Thanks, Michael. Great to be here.
Now, Steve, first I want to congratulate you on your 30-year plus journey with Lawler and PKF. I think you have the simplest CV I have seen for a career spanning that long. You've been with the same firm since you joined as a cadet. What made you stay for so long?
Oh, look, I think when I joined, I had an early stage in the career, the training and development that Lawler's provided at the time, and the culture was just so much fun. We've always sort of had an ethos of, I think, work hard, play hard. And, along that journey, that's never been lost on us. And so today, we pretty much have that same sort of mentality around enjoying what we do. And so, I've always felt that it's offered me challenges and opportunities, and we've had fun along the way doing it. So had no reason to leave.
You're saying accounting culture can be fun?
Absolutely can be fun.
Yeah. What made it fun back then? Especially you joined in the late 80s, 90s. That's when the stereotypes were absolutely rife, of a typical accountant. What made it fun?
It was fun in the sense, I think at the time we were the size, when I joined, there was only a couple of partners, about 20 staff. And we really sort of integrated well as irrespective whether you were the partner or the trainee or the administration person, we all just interacted, whether it be socially, we got in and got the job done. The partners at the time, would look at how you were performing and as a team and reward us, and we'd go off and do things together socially. And so it never felt like that, the partner was there and the trainee was down there. It always felt like we were just there to get a job done. And when we got that job done well, the partners, never failed to sort of, reward us, and we had fun in that journey. So, it was quite casual at times, but the ethos of looking after the client and getting the job done was always there, but they just made a really good cultural environment.
Do you feel that's changed? Because obviously PKF Lawler has come a long way from a few partners and 20 staff now to quite a few more than that.
Yeah, look, no, as I said, I think one of the things we've never lost sight of is enjoying the successes. I think often in business, too many people look at what you aren't doing and what could you always do better. And sure, that's important, but you've always got to take that time, I think, to enjoy the successes when they do happen, celebrate it with the team. And even to this day, we do a whole lot of reward activities with the teams, and sure, as you get larger, that gets harder. And some of those activities need to be broken down into your micro teams. But even at a firm level, we still have a couple of key events through the year that's about getting everyone together with their spouses and their girlfriends and wives and partners. And it's a really big part of our culture.
Do you feel you've maintained it quite well, like the way it used to be when you first joined to the way it is now? But just as you said, now you have to do it on a micro team level and an office level, etc.
Yeah, absolutely. We've maintained it. What gets more challenging is, not everyone at any point in time can be doing the same thing. So because you're breaking it down in teams, it's
Yeah.
certain teams do certain activities, others do others. So it just becomes part of how well you communicate all that, and and we do that quite well. We quarterly sort of talk about what's going on in the business, and we share the successes that are happening, rewards that have gone on, and that transparency, I think, around it all is
Yeah.
what has made us not lose that culture.
Yeah. Okay. How long did it take you to become a partner, Steve?
I started in '89 as a
Yeah.
trainee, and in 1999 I became a salary partner. And then in 2002, had the opportunity to take up equity, so became an equity partner in the business. So it was really that sort of 10 to 12-year journey for me from my traineeship
Yeah.
days to get to being an owner in the business.
Have you always wanted to be an accountant, or how did that like come about that you wanted, to do, or you ended up being a cadetship and ended up doing an accounting degree?
Really good question. No, I had no intention of being an accountant originally. So back in the days of school work experience, I was actually trying to get into the RAF here at Williamtown near Newcastle
Yeah.
to try and get in there. And I had thoughts of maybe being a pilot at one stage.
Top Gun.
Yeah, well, I wouldn't say, don't know. Never know now, but at the time, the RAF just couldn't do that. And the careers teacher said, "What do you want to do?" And I said, "Look, I've got no idea." And he said, "Look, I've got a mate who's an accountant in East Maitland. How about you go there for a couple of weeks and see what you think?" So, cut a long story short, I went there, really enjoyed it. That accountant offered me to come back in the school holidays and work for them, which I did. And then when I finished year 12, Lawler's at the time had purchased the accounting firm in East Maitland. And what I didn't understand was the partner had done a deal that, part of the deal was that I'd been offered a job with them at the end of year 12. So Lawler's were good enough to hold that. And the rest is history. The rest is
That's how
history.
it worked.
Yeah.
Okay.
So, yeah.
So, and you made up your mind basically after that experience, and you tend that that's the path you're happy to pursue.
Yeah, definitely. No,
Okay.
just in a short period of 2 weeks, I had a really good opportunity to be in front of clients with that person at the time.
Really?
Yeah. So he was really good in the sense of getting
Like, wait, when you were doing your work experience, or
really.
crazy? So you're just like your 10 kid,
Yep.
basically telling clients how they need to go about their accounting?
Well, I wasn't so much telling. I was probably sitting back more so observing and
Okay.
taking furious notes for the partner at the time. But and a bit of travel in that. He had clients that were sort of quite distributed in regional areas, so got the chance to go out for the odd day trip and get on site onto clients' businesses. And I thought,
No wonder it was exciting. Imagine if you
yeah,
had a different experience. Like, imagine if you came in there and all you had to do was photocopy stuff and
yeah.
I don't know, go through a box of receipts and data entry that.
Yeah, and ironically, one of my fellow partners still today was a senior accountant with that same partner at the time, and the both of us today are still part of the PKF family. So
Amazing. But do you think if you had the more traditional experience where like you were doing the data entry, invoices in a shoebox, no client exposure, do you think that you would have still chosen this as a career path?
No, I don't think so. I think if I look at my own sort of personality and the sort of things I enjoy, I'm quite extroverted. I think if I'd been stuck behind a desk for that 2 weeks and just said, photocopy this and do that, then no, I don't think that's the path I would have taken for sure, Michael. So it was,
Amazing, right? Like,
yeah,
just a very different approach, and that's why you speak to junior accountants these days, intermediates, and one thing they all complain about is like the lack of client contact, because the partner tends to hog all of that due to either control factor, or they don't want to lose their clients in case someone leaves, etc. Is that something that like Lawler, because obviously Lawler took over the practice, is that something that you found when you moved over to Lawler was the same kind of approach?
yeah, definitely. And it's always been a big part, I think, of Terry Lawler in his approach to client service was, the ethos of how can you give a client good service if you don't really understand and know that client and know their business. So,
and feel a connection to them, right? Because
yeah,
like you're not really connected to them unless you've met them, you've seen them. There's a human to human aspect.
yeah, definitely. And I think, in business, the connection needs to go beyond just the owners, so I
Yeah.
think the opportunity for accountants at younger stages of career is to actually form or start forming relationships with the people within the client's business, whether that's their equivalent in the finance team or the
Yeah.
company accountant or the bookkeeper. It doesn't really matter who it is, but it's something that we've sort of pushed hard over the years to really try to give people an exposure at a younger stage of their career to be in front of a client. And for sometimes that's just got to simply be sitting in the meeting in our office with the client from a training and observation perspective. But where we can, absolutely, like to get the people out on site and give them an exposure to what goes actually on in business. The numbers are only the end result of everything that happens in a client's business. So the more they can understand and see and be exposed to that, then surely that's got to be a better client service than.
So you actually get your staff to go out and visit your clients regularly.
Yeah. So a part of our training program is to really try to get our people exposed to the clients that they are working on, and so that's a responsibility on both sides. We have a responsibility on the person coming through their stages of career and on the partners and client relationship people to really take that opportunity to tag someone along with you. And it's been fantastic, to be honest. I think it changes the whole perspective of a person's view of what the accountant advisor relationship is all about.
That's amazing because I don't look, unless I've never asked, but I've never come across other firms that actively or proactively ensure that, well, forget about, I don't know many partners that go out to client sites and make sure that, they know the business inside out, except the audit team. But because we're referring to tax and business services here, right?
Oh, absolutely.
Yeah. So the fact that you guys do it for your junior staff as well, I think the idea is brilliant because, as you said, there's that the connection is there, the understanding of what the business actually does. And obviously, if you're connected to the business, you have an understanding of it. It's a lot easier to do your work, and you kind of feel more obligated to deliver a good service because it's a human now, it's a business now, it's a real thing, not just a file, on MyUp or Xero.
Yeah, no, it's so true, and I think it works both ways in the sense that, as much as our team get reward from that, it's amazing to sort of get some of the client feedback where, their team will make comment about our team that are at those lower levels that they've been working with. And it's purely because they've got a relationship, right? It's not, it's not just someone they have never met, as you say, sitting behind a desk, punching away at their work. If things go on or they need to, raise questions, or then they know who to go to. And it's, we also see it as a bit of risk management. It's in the sense that if you happen to lose someone, out of your team along the journey, then there's at least a couple of points of contact into that client as opposed to just the partner.
Yeah, okay. And when you say like, I guess when we talk about a client interaction, are you thinking more like your larger clients, or is that even just your SMEs that are, a couple of mil turnover, local real estate agency, a baker, whatever?
Yeah, definitely. So it's actually easier to sort of implement it with those smaller clients than the larger clients. I mean, the audit team, as you correctly say, they're often out on site with the larger clients all of the time.
Yeah.
But those sort of SME clients that are, privately owned mum and dad businesses, they're really easy to sort of get our people out on site.
But what do you do? Like, do you send someone, say you've got a junior account or intermediate one, do you tell me how that works? Like, do you call up a client, say we're going to send someone, they're just going to like hang out, have you got an office with them and they're just going to hang out for the whole day? Or is it just like, hey, we just come and do meet and greet kind of thing and show us around? How does it work?
Yeah, sure. It's a bit of a mix of all of that. So we often take the opportunity potentially for picking up client records, or running through things where that sort of more junior staff member can be involved in that process. Secondly, e.g., if the client comes into the office, we take the opportunity to introduce, some of the team underneath to that. And often it can be just a quarterly management meeting or a meeting with the client where we just, say to the client, look, we're bringing Jamie along. It's part of her training and development.
Yep.
Do you mind? And I've got to say, I've never had a client say, no, we don't want you bringing your team on site. They actually enjoy the opportunity to introduce their people to our people, so.
Yeah, okay.
Yeah. And we even roll that down to our, what we call our team coordinators, which are our admin, team, where we can, try to get those people engaged with the clients in some way, be able to meet them and know who that they're dealing with.
Do you think that's changed much with like automation and digitalization now? Because you're no longer picking up files. You don't actually even need to see your clients, really.
Yeah, it's absolutely more challenging in terms of finding those opportunities to do it. But again, it comes back to, how deep the relationship with the client is. And, we've got a model that we sort of roll with our SME clients, that we tag our future of choice. And that's very much about behind every business is actually a family, or a private person, etc. So, the business is just one part of their world. Sure, for an SME, it's often a big part of their world, but you've got to get in behind the business and really understand and build a trusted relationship with the family, because ultimately, that's who you're delivering the service to. If you think about succession of businesses, you want to have your best foot forward to that when mum and dad decide to pass the business on or do whatever they want to do, what relationship have we got with the siblings underneath, to maintain that client for life. So it's you're spot on in that as technology imposes itself more heavily on what we do, it's just finding that right balance between the technology and the personable skills to still maintain how you deliver to the client.
Okay. And the clients, I guess, is it because you train your clients from an early stage where it's not just partner contact, like it's the whole team involved?
Yeah, very much. Look, it's part of our training and development program. So from a client perspective, it's often really easy just to explain to the client, look, this is part of our development programs. It's part of us providing a better service to you, etc. As I said before, I've not had a client go, no, don't bring Jamie along, or
But do they still deal with Jamie, or do they still, like, any issues, they still call you and go, Steve, I've got this thing?
No, part of our model is very much to, what you tend to find, Michael, is out of that. Let's say the company accountant for the client, or let's say the wife's doing the bookwork or husband's doing the bookwork. What you tend to find is that you actually have a better chance for that client for some of those queries and questions to go to e.g. Jamie first. And then often we'll leave the sort of higher end advisory discussions, with the partner. So we actually find it sort of helps you get a better leveraged model in how you sort of deliver your service to the client.
Yeah, okay. And you normally would have, like, are most of your clients on a system where they, see you just once a year, or is it like quarterly, monthly, or?
Whole mix. There's not too many clients we would only see once or twice a year these days. Most clients, we either have into a monthly or a quarterly arrangement. Our service model, we tend to do that on a retainer style model. So, clients hate getting those large bills and forget what everything's been about. So part of our future of choice offering is really to package that up together with, availability for support and questions. And build that into sort of a monthly style revenue source, and it's worked extremely well. It's
you guys have been doing that for a while, though, right?
Yeah, we have. Yeah. We've probably been on that journey for a good sort of 7 to 10 years, to be honest. From when it started in its early stages, but certainly over the last 5, it's our model of engaging clients and.
Offering them a package, whatever they need, monthly fee, and it's done.
Yeah, and I think, again, clients, they like it. They understand what's it about. It's good for their cash flow. It's good for our cash flow, of course. But I think it just sets the expectations of what's going to be delivered. It gives you a good reason where you're constantly in contact with the clients, as opposed to, as you say, once or twice a year catching up with the SMEs.
Yep.
And they feel like they can pick up the phone and not think, oh, is the clock ticking, so to speak.
Yeah.
So,
yeah, okay. And look, we talked about the fact that you've been doing this for 30 plus years. What are some fundamental shifts that you've seen over that career in terms of how accounting is done or delivered?
Yeah, look, I think the big thing that we talked about before is technology. So, back in the days when I was a trainee, it was the old ledger book came in from the client with the bank statements, and really a client didn't really understand how they were going until that ledger book was reconciled and a set of financials were put together. And I can remember the old days of, the spreadsheet, then with the percentage analysis and all that sort of thing. And clients thought, yeah, that was fantastic, right? But
did you have a computer, Steve, at that time?
When I first started, we had one that we shared.
Across the whole office?
Across the whole office.
Okay. So when did you get your own, you had a personal computer at your desk?
That's a really good question. It certainly, I don't think it would have been in the first three or 5 years. It was probably about the mid-90s.
Wow.
Probably about the mid-90s.
So until then, you were doing ledgers basically in a book.
Yep.
And then sending it back to the client.
Yep, you'd do we had back then, there was no, we weren't using Microsoft Excel. You were using a product called Multiplan that some people out there might remember. So it was probably the first evolution of spreadsheeting, and it was very basic, very fundamental. So it was, take the book, reconcile it, put a set of income and balance sheet together. That was all, again, a manual reconciliation. Terry was very big on us, presenting more to the client than just their numbers. So we would do percentage analysis and a little bit of sensitivity sort of modeling in its early stages.
Yeah.
So it's quite
all handwritten, or would you have like a typewriter and you typed it all out?
Yeah, typewriter that ultimately then, when Multiplan come along, was on the computer, so you were able to print the spreadsheet out and the like. So yeah, so technology's come a massive way. And I think what's changing at a rapid pace is the days of the accountant taking a client's data and simply presenting them back their own data in virtually the same way. Clients aren't prepared to pay for that. And so and rightfully so, right? So I think the big evolution is around the whole data science, data analytics, what's in behind the numbers, what are the drivers that are impacting that, in their business, and therefore the training of accountants is changing rapidly and has to change. That is not so much necessary these days about just the numbers, but it's about getting in and understanding that business, understanding the drivers that make up that business, and what are the things impacting those numbers, and then being able to challenge the client's thinking on those things that are going on in their business, that can sort of find the little 1% improvers that help their numbers get better. So
how did you guys go about, implementing that system or approach? And do you use particular software to highlight those drivers or figure out, is it all business acumen aspect?
Yeah, look, I think there's probably three main factors for us. Definitely, we've invested in different people and different technologies, things like Tableau, Power BI, all of those analytical tools that I'm sure everyone's heard of.
But is that the two main ones you use?
They'd be the two main ones. Yeah. Two main ones that we would use. And of course, Excel still has its role. So, and then from a cash flow modeling point of view, we're using things like Castaway. That's a three-way modeling tool that's more about, financial modeling and sensitivity and so on. But I think the other key factor is really then, what does your training of your people look like? Because, what we're finding is two things. One is you are recruiting a different style of person. So the days of just recruiting the accountants that have come through, being a trainee and gone to uni and done a Bachelor of Commerce, these days you're employing people that maybe have been executives in certain businesses, you're employing data scientists, you're employing technology gurus,
Wow.
So
But to be accountants or to offer ancillary kind of services?
yeah, to be, I guess, to help facilitate one, that notion of taking clients' data and really being able to drill down and manipulate to offer, a true advisory service. So a part of what they do is, they're never going to sit there and do a tax return and and do a set of financial statements. But if you talk about rawness of data and data warehousing and how you present to a client something different that adds value to their business, then those people are very critical recruits for us. So
Okay. So you have some people that
team,
are, a whole team.
yeah, teams, yeah. So we've now sort of got decent sized teams in technology, data science, those sort of things. And then depending on industry specializations and the like, we've brought in people that, say, in our hospitality space, people that have just run pubs or clubs, so you get that other side of the experience that aren't accountants by profession. So,
and then you bring them in on the meetings, basically.
Yeah, well, they're part of the advisory team. They're absolutely part of front and center with clients in terms of helping those clients go forward.
Yeah, wow. Okay. What do the data science guys do? Like, for example, I'm just trying to think of how the workflow works. So you have your accountants that will still do obviously the books, and then the data science guys pick that up before the meeting. And how does that work?
A bit of a mix. So the data science guys can pick up the raw data first for the clients, so they might be the first port of call to be extracting the data, and then using that data with the accountants to do what they want to do relevant to the client. So if that's safe in the advisory space, in our hospitality space, those data scientists are working very closely with the accountants and the advisors on, creating dashboards and benchmarking and all those sort of things for the clients that are in those spaces. And then in our audit space, we've been on this journey for a while. Is the days of sort of taking a sample of a client's data and testing that from an audit perspective for assurance purposes. Our approach very much now is to grab 100% of the data. So using those data scientists to grab 100% of that data, such that your assurance process is running across all of the client's data. And then rather than just present an audit, being able to go, look, client, by the way, in looking at our data, here's some things that we see going on in your business. And that can be, Michael, from, risk aspect, look, you've got your GST wrong here, as an example. Payroll assurance services, around, are you paying your people right? Is variations in leave versus what people are saying they've had, right through to, hey, here's some drivers in your business where if you change these a little bit, you could exponentially grow your gross profit margin and so on. So it's a
and you have a piece of software that would do that for you, or
that falls out of the Tableau, the Power BI. So we're using those tool sets
for the audit part as well, to interrogate the data.
Absolutely, yeah. And that then sort of feeding in and integrating with our traditional systems that do the audit financials and do the the accounts for clients, financial statements and so on.
What's your practice running on now in terms of like practice management and workflow?
Yeah, we've in the last few years we've moved to a more an ecosystem approach. So we have a mix of GreatSoft from a practice management perspective, integrated in with Xero for our taxation and our financial statements and so on for clients, integrated with now Infinity for our corporate register, changes in shareholding and directorships and company records and so on. And then from a document management perspective, we've gone to FYI docs. So we've really worked with those vendors on an ecosystem approach of having their tool sets integrated that then integrates with some of our other more specific softwares that we use for different purposes across the business. Audit with their caseware, business recovery with their core IPS system, and so on.
Are there any other strategic kind of initiatives or things that you are looking at right now just to keep up or get ahead?
Yeah, we're doing a few things. So that whole digitalisation is a massive part of our strategic direction for the next few years. So where we will continue to invest in things like Tableaus and Power BIs of the world, data scientists and all those we talked about. The other area that we've gone heavily into is the whole wealth transition. And if you look in the Australian business market, the succession numbers going forward of businesses, in the next 10 years is enormous. There's a massive amount of wealth transitioning from the baby boomers through to next generation. So we, again, both from a technology and a acquisition and recruiting of different people perspective, we've gone down a pathway there so that we've actually started to, invest in some technology that's built around that. Recruited some people, bought into our business that has been in that space for a while. So that's one area that we're investing enormous, and that then is rolling back into the training of our people, away from maybe your traditional accounting sort of training programs. That's one area. The second area is the whole notion of HR and people and culture. And if you think about any business, getting the people bit right is crucial to the success of any business,
Yeah, especially in professional services.
Oh, absolutely, especially in professional services. So again, looking at, does it make sense for us to have a HR consulting aspect to our toolkit, that we assist clients with? So we've sort of been looking at that, over the last 12 to 18 months quite seriously, had a few discussions with a few different players in that space, and still continue to have those discussions today. So I think that'll be another area that we sort of, push into. So I think if you summarize it, it's that digitalization, it's that wealth succession transition planning, and it's that people, HR, culture aspect of business.
Okay. When you talk about the wealth transition part, you say you bought into a company and like different type of people, different training, etc. What does that refer to? Because obviously a lot of accountants do and facilitate succession planning. But from a tax planning perspective, I guess what's your kind of approach to it?
Yeah, look, the real point of difference, I think, is most, we're as guilty as anyone. I think most accountants will come at it from the financial and then the legal aspect of transition planning. The big piece that often is successful or not is the human capital aspect of transition planning. And we've all heard the stats before, what is it? Nearly 90% of mergers fail, and, transition to family ends up in a bun fight and those sort of things. And when you break it down, and the business that we did buy into, what they've been doing quite different for nearly 15 years is really at the heart of what they approach it from is the human capital aspect of that. And so they've created, if you like, a framework. And
are they an accounting business, Steve?
No, they're not an accounting business. So they were a couple of, one was certainly had come through the accounting profession. One had not, of the two principals. There was three principals originally, but one had come through the accounting. The others had not come through the accounting profession, but had more gone through their own experiences with succession planning, and took the opportunity to get into the consulting aspect of that. And so it's been a real eye-opener for us, Michael, from just how critical that human capital element of it all is, especially if you're talking family transition. And, they're all the same. You've got, say, 3 kids in the family. One absolutely is fully in the business. One's part into it, and one couldn't give a damn about it. And so how do you manage all that from a wealth transition and family succession perspective? So, with the business we invested into, and where we're now taking some technology development around all that, that whole human capital element is a big part of what we're instilling in our people around when we're talking with clients, what's important. And I guess, if you relate that back to our earlier discussion, hence the importance of getting your younger people out on site with clients and understanding what goes on in their business. I just think for the profession at large, that has got to be a massive shift in how we train and expose our people, as the nature of technology impact comes on the more traditional compliance and reporting services. Is, that's diminishing by virtue of what technology is doing. But But on the other side, there's a massive opportunity to get closer to your client and do a whole lot more in the wealth advisory space.
Okay, so what do they actually do? I'm still trying to figure that out. Like, they're cool. They've got this consultancy that specializes in succession planning.
Yep.
What exactly do they actually do?
Yep. So
for the client?
they basically first stage is they really sort of start with this discovery. What's going on in the family unit, what's going on with the business. What does mum and dad want to each of the siblings want, etc. Out of that, then obviously creates the thinking of where the family unit is thinking about all of the wealth and so on that the family has got. So then they very much take them on a journey of a few pillars that says, well, okay, if you think about what you've got in wealth, you've very much got the management of the business.
Yep.
You've got the asset of the business and or property, that you've got. You've got the estate planning considerations for what you do with all of that. And then you've got, the people aspect that very much, there's a whole lot of stakeholders in all that, all the way through from the family, the siblings, key employees, et cetera, et cetera. So from a human capital perspective, they very much, whereas the accountant traditionally would sort of jump to, well, what's your assets, what's your liabilities, what do you want to happen with them, blah, blah, blah. This approach very much comes from the people humanistic aspect.
So psychology, basically. I can imagine there are probably psychologists working there.
Yeah, absolutely. It's a really interesting point. Talking with Mark that heads that for us yesterday. We're only talking about that aspect of profiling. People profiling, and do families truly understand whether it's their key people in their business or their own siblings? What does the profile of this person actually suit what they're wanting to achieve, So, so it's a massive human element to it that's just quite a different tact. So very much, to answer your question, they very much take them on a journey of discovery, issues, consensus, then get to a sort of a family charter understanding, and then deal with all of the aspects that you traditionally would deal with on, transfer of properties, what's the tax impact, estate planning, have you got wills and those sort of things in place.
And that's where you guys will come in.
Yeah, but it's very much those first couple of stages is quite a different approach. And the reason we sort of went there was twofold. One is they've got a very structured framework by which they take a family through it. And if you think about that, that gives us both an opportunity with our client base to be on the front foot earlier. And two is, because of the structure of how they've got it, it's such a great training platform for our people to really take them on a journey earlier in their career, that hopefully they become better advisors by being exposed to that, when they do get to be a partner. So
most of your, and obviously because you came through as a cadet, and quite a few of the partners actually have, majority of your partners, I think, are homegrown.
Yeah, pretty well.
And you obviously still maintain the cadetship program, I think.
Yeah, we still have our trainees come on. We've probably moved away from, we went through periods there where, each year at January, we're going to take on 8 and et cetera, et cetera. We're very much now sort of consistently looking out for and bringing on, trainees and the like, just in regards to, the market's such a competitive environment, is fair to say. The younger generation, they don't want to wait for if they want to get going in a career, they want to get going now. So we've had to adapt our, a way of recruitment, your review process, things like mentoring programs and all those sort of things that go with it. And our pathways, we've just in the last few years really redefined our pathways of our people to really, align with some of what we just talked about in training and development and fast tracking and all those sort of things.
Okay. Can you give me some things that you've observed and some things that as a result of those observations that you've changed in the business? Because obviously the type of people you're now recruiting for and the attributes to look for, and also B, the pathways, have they changed? Like, what have you had to implement or bring in to your training now, etc.?
Look, probably the most notable that we've dealt with is what we call our Dare to Aspire. So
Mm-hmm.
if you think about a person in our profession, they leave school, they become a trainee, they go to uni, they finish uni, they go to their professional year, and then it's like, what's next? And so all the way through from when they're very young to when they finish that CA program or CPA program, it's a very structured learning framework.
Yeah.
And so what we found was that where most people start to get disillusioned in the profession is when they finish that structured training, because they're thinking, well, what's my framework now? How do I choose where I go? And so our Dare to Aspire basically picks up people as they're in the process of completing their CA. It takes them on what we call our Dare to Aspire pathway, which is a mix. It's like a transition where it's a mix of some of that more formal training and group training and workshops, but equally it's very much about their soften people and getting client exposure and all that aspect that goes with becoming an advisor. And so that's been a massive shift for us, and in that program, that's a mix of where we get them to work on some of our strategic initiatives as groups. They've got to present back to the partner group, so they get some exposure to presenting. As I said, they've got to reach out and form their own little networks, etc. So very much a different tact, but trying to help them transition away from, the last 20 years of structured learning to, some of the more softer side of learning and less technical side of learning. So that's probably our big one. I think the other area we've dealt with is what we call our fast track program. So when I was sort of, trainee, you had 12 trainees in the firm, let's say, and they all got the same training, and then you became an intermediate, and then you got that training. And whereas now, yes, there's still a mix of that in the firm. You've got to have that. But equally, for those people that are wanting to get to be an advisor sooner rather than later, you can't just sit back and wait for everyone to be moving at the same speed. And so our fast track program is very much about identifying those people and then tucking them in under a mentor or mentors that can help get the areas that they need developing there sooner rather than later. And then, as I say, get them as exposed to the different sorts of things we do, the different clients, networks, etc. So they've probably been the two big, and that's been driven both ways. That's been driven by impact of technology, which means accountants have to become advisors. And equally, the generation coming through, as I said, they don't want to sit back and wait for, I've got to wait this year to be a trainee and next year to be an intermediate and next year to be a, so we've had to adapt those. And I'm sure if you talk to anyone in the profession, it's certainly, they're all being challenged by the same thing.
Majority are still compliance firms, to be honest, in the profession, as you know.
Yeah, look, I think that's in the majority.
Like, they all want to say they want to move to advisory and all, like they can see the potential for it, but when you're running a practice with, say, 2-3 partners, 10 staff, 15 staff, like they kind of just have enough time to do the compliance for the most part. Yeah,
absolutely. Yeah, look, in this succession wealth transition space, that's part of what we're looking at is in this technology that we're creating, is that something that either 2 to 3 smaller partner firms could tap into, and we could help take them on a journey and those sort of things. So, but you're right, and it's harder as a smaller firm just to create that capacity in the business to be able to make that shift and train your people that way.
But just the training alone is extremely enormous, time consuming.
It is. And it's, as I said, it's not, if I look at our training programs today, the shift from technical to non-technical has swung massively in the last 5 years. You've got to be investing as much, if not substantially more, into their softer skills and becoming an advisor as opposed to being an accountant.
Has your investment been primarily internal, where it's just the mentorship aspect, or has it been a lot of external as well?
Yeah, both. So from an external, with our various pathways, we've worked with some external people in bringing that together. Equally, in their training program, we get the people to go out and they've got to reach out to external people as well to become mentors. So
So that's the thing that you actually force them to do that.
Yeah. So we Dare to Aspire is one of our programs. Thrive and Lead is our other program, and it sort of builds off the Dare to Aspire. Absolutely, in the Thrive and Lead, they have got to go out and interview / try to work with an external mentor as part of that program. And it's been a great exercise in itself, just from, and that's been a mix, Michael, of, we've got clients that they reach out to that have been successful and they want to, have them mentor. Other individuals know people that aren't clients that have been, they feel that can add value. So we don't really direct them to who they go to, but we certainly force as part of that program, they go out and build that.
It's a great system. I like it. But who I guess maintains the accountability aspect in the implementation of those programs? Is it L&D, HR, or the partners or the managers?
Partners. So what we do in that program, any participant must have a sponsor partner. So we ensure that there's a sponsor partner accountable. And the people that drive that program for us, which is a mix of external consultant that we've worked with and internal partners, their mandate is to ensure that those sponsor partners are fulfilling their obligations to the program as equally as the participants with their program. And so we then get that gets reported all the way through to the equity group, the ownership group. And then the people that are in the program actually get an opportunity to integrate and participate and present to the equity group as part of that program as well. So you really got to get that buy-in, at many stakeholder levels. But it's been, I think, it's been a change in how we do things that we've seen positive outcome, in those people.
Have you got a program that maintains, or just to ensure that nothing falls through the cracks? Because I find like even performance reviews, everyone knows you have to do it, but it kind of becomes a chore for the partner and for the staff member.
Sure.
And then you kind of just like, oh shit, I have to do that. It's like HR reminds you that, or someone reminds you at the top, and then you just do it last minute. How do you ensure that like those steps are continually done when all the partners, I would imagine, are quite busy doing their own thing? Is there a program, or is there?
Yeah. We our IT team developed a program that we call Kaizen in our intranet SharePoint portal. So it basically, and it's not just about the normal mid and end of year reviews, but if someone's having mentoring and it might be a monthly check-in or a quarterly check-in, within that Kaizen is the opportunity for the KPIs to be set that then can drive out to get feedback on those specific KPIs to individuals. So there's a bit of a reminder process that's built into that. And then I guess the wiki keeper is our HR, Danielle, that'll go, hey, XYZ doesn't have anything in their system for the mid-year review.
Because you need something, right?
Absolutely.
Like you either need a system that otherwise humans are humans. Like we always miss stuff.
Yeah. And absolutely, and we're not any different to any other organization in that respect. The only thing I'd say that, I do find is, again, it comes back to, what's your culture around your people and what strategically are you trying to achieve? Because if you're adamant and fair income about getting to becoming an advisory firm and getting to have your people a little bit different trained than others, well, the partners have to own that, at the end of the day. You've got to own that to get that strategic outcome, or and in a competitive environment, we're all looking for what's that little 1% of difference that attracts that person to come and work for you or attracts that client to want to work with you. And so, I think culture and strategy play a massive part in the people development, getting it right.
Has the retention changed much? Like since, usually I find from my experience, you have a whole intake of grads or cadets, and then there's a percentage that always falls out, some within a couple of weeks, some within 6 months. Do you find like if you change your approach to the recruitment side or through the programs you mentioned, that has had an impact?
Yeah, I think the programs have been a big thing. So, it's that, as I say, the risk always, I think, has been when people are sort of coming towards that end of their CA, they're in that sort of senior verging on manager sort of space. And still that senior verging on manager space seems to be for the profession the real challenge of finding trainees and intermediates.
I find it's a cliff. Yeah, there's a big fallout there.
Yeah, so that our whole Dare to Aspire is about trying to retain at that precipice point, when people get to it. So that's certainly been one initiative that we've done. Two, I think that tradition of mid-year, end-of-year reviews versus that ongoing mentoring, catch-up support framework. So we've got a lot of that across the business where, people are catching up with their mentors, whether it's some are monthly, some are quarterly, doesn't really matter. But I think you've got to make sure that the move away from the traditional mid and end of year, and it's more an ongoing commitment that you've got to, put to those people is where you try and hopefully hold people and ultimately hopefully attract people, because it offers them something different than maybe what they're experiencing.
Now, have you never had a desire, or have you ever had a desire to see how other firms do it and go to another firm or go into commerce and give that a go?
No, I've
never. It never even crossed your mind. Never entertained a conversation.
No. I've had over the years, I've had a couple of approaches, from different, whether it's other firms and or commerce. But as said, I've always enjoyed what we have. These days I get to have a big play in what we offer, by virtue of my role. So I think it's something that I've never woken up any day and gone, I want to go somewhere else. So I think whether that's luck or it's part of the road that I've been on. But to answer your question, no, I've never had that inclination to go and work for someone else.
Okay, but you see it these days, even, and obviously despite all the programs you have and all the mentoring you guys do, everyone has some fall off. No one's retention rate is 100%.
Correct.
And even partners move around. Traditionally used to be when you made partner, you kind of stay there for life. But now partners move around quite a lot as well. What do you attribute that to? Is it just a millennial thing that or?
Yeah, look, I think culture has a massive play in it. So if I look at some of the people that are today our partners that have come from other firms, and you're probably better off to ask them than me, but I do honestly believe we have a really good culture. We've always been, and I go back to the days when I was a trainee, as a firm, we've always been transparent with our team. So, our team, they get to experience the good and the bad with us. So we're upfront with them about that. We're very clear, on strategy. So we're communicating consistently around where we're heading, what we're doing, etc. And I think as long as what you're offering aligns with what the person's after, then there is no reason for people to go. So the moment people leave, and we have it, we have people leave for sure, and if I break it right down, I pretty much offer an exit interview with any one of our people that leave, and some take that up and some don't. But when you break it down, it's always that misalignment of what you're offering and where you're going versus what that person's after, and people will go, great bunch of people, love the team that I was with, but I just want to go off and do this, and if you can't offer that, well, there's no use getting bitter and twisted about it. You just, wish them all the best and move on.
Yeah. Okay. What's had the biggest impact on you in your life?
Biggest impact, well, professionally, let's talk professionally first, is I was very fortunate with the partners that I had when I come through sort of those early stages. So two partners, Ray Tolcher and Terry Lawler, really, to me, demonstrated what the ethos of, one, looking after clients, but two, treating people in a business how you want to be treated yourself, and so I think in that was a couple of things, one, recognizing that it's okay to not have all the answers on the spot all the time, so you've got to be game and confident enough to, if you don't know, you say to a client or to a peer, I don't know, but I'll find out and come back to you.
Yep.
So absolutely, in a professional sense, those two people, had a massive impact on my career. At a personal level, something that, I lost my nephew to a brain tumor in 2007, and very close to him, and he was my brother's boy. And that made me as a leader realize that, what, it's not just always about the dollar in business. And I looked at how PKF and Lawler, Lawler/PKF, how they looked after me and our family, our extended family, going through that traumatic period. That instilled a massive part of me today in terms of things like empathy. It's not all about the dollar. It's okay to be vulnerable. There's always people out there doing, things a bit tougher than you are. And so from a client perspective, we can always sometimes get caught up on, why hasn't this client paid me the money, or why aren't they doing this? Or, what it taught you to appreciate is, in someone's life, there's usually a lot of stuff going on that's bigger than the thing that you're trying to get resolved with them. So, so from, a personal perspective, that had a massive bearing on my life, still does.
Yeah, okay. Thanks for sharing that, Steve.
Yeah, no, sure.
Talking about leadership, obviously, look, you became partner at a relatively young age. You kind of grew up through the ranks. Well, I'll ask you from the partnership perspective. Like, did you always see yourself as a partner? Like, you knew that was your ambition? I want to be a partner and eventually managing partner, or?
Yeah, look, probably in the first 5 years, no. As I got towards, probably finishing my degree, I certainly thought, and as I said, at the time I had Ray Tolcher was my direct partner, another partner in Simon Rutherford, who is still a partner today, and got massive amount of respect for Simon. I was fortunate in that they gave you the exposure and opportunity to see that life as a partner can look pretty good as well. I think too often these days, people sort of go, "Oh, why would you want to be a partner? You're working all these hours, and you take on an overdraft, and da 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 da." But those two guys in particular showed you, that it doesn't have to be that way. You can work smarter rather than harder, and still be successful. And so, at that point, I sort of went, yeah, I think this is where I'd like to take it, So probably from about that 95, 96 period, Michael, and so sort of went hard at it. And then in 99, got the opportunity to become a salary partner, which was great. And at that time I said, look, guys, I don't want to stop here. I'm keen to get into the ownership of what was then Lawler Partners. And a couple of years later, I had that opportunity, thanks to Terry and Ray and Simon. So.
And then managing partner, when did that come about?
Managing partner came around in sort of the 2008 or so. I had a really good relationship with Terry. I had a chat with him one day and just said, look, what's your plans? Where do you see, where do you see succession for our organisation, etc. And Terry sort of almost caught me off guard. He said, well, are you interested, mate? I think you do a really good job. So to cut a long story short, at the time we had a chat, we were having a chat as an equity group, about succession and all those things. And anyway, Terry sort of tucked me under his wing, and the partnership group was comfortable, that's where I wanted to head. And so late 2009, I got the opportunity to take on the managing partner role, which I've held since.
Do you feel like the attributes needed to become a partner back then are the same as they are now?
I think at the core of it, absolutely. I think I have this saying, Michael, these days, 9 ways to skin the cat, and everyone, the older brigade will have heard of that. But I think probably, things like passion for the job and resilience and all those things, I don't think that's ever changed, in terms of, if you want to be a partner, you've got to accept that all that comes with it, and there's the good and the bad that happens along that journey. But what I do see these days is adaptability, is a massive part of it. So you've got so many things flying at you with respect to whether it's technology or what the next generation are after, client expectation, etc. So I think, what's changed is, you've got to be adaptable. You've got to surround yourself with expertise in areas that you never had to historically, things like technology, data science, all those things that who would have thought the accountant needed to worry about those things, right?
Yeah.
So I think those aspects of it have changed. And I find these days, the notion of how you think about the role of the accountant is changing, therefore means that as a partner, you've got to be prepared to open up. Having come through the more traditional pathway, you've got to be prepared to open up and accept, well, you know what? I might have someone sitting around this table that's not trained the way I'm trained and is, just been a successful business person in their own right, but they're now a partner of our organisation, or they're a data scientist that's now a partner of our organisation. And so I think that's
sorry, go on.
And I think so. I just think that's sort of what's changed. Whereas the core values and skills of resilience and vulnerability and empathy and all those bits, that's at the heart of just the profession we're in, which is we deal with people. So you got to have those.
But you still have to have the same thing, where it's like I don't know what your journey was like, but traditionally you have to demonstrate the business development aspect where there has to be enough fees brought in so that when you become an equity partner, the rest of the partners don't take a pay cut. There's always that aspect.
I think that's changing. Absolutely. Certainly as a partner, you've got to have the ability to position the firm, but some of our partners, I think themselves would say, I've got better strengths in other areas necessary than just being a business developer. So if you, as I say, I actually think these days, it's not just these days, business generally, you've got to get the people piece right. If you so it's about, as a partner, can you be a good partner that ensures you surround a good team around you, and you can take them on a journey strategically as to where you want to go and where we want to go and deliver that client service. Then that person doesn't necessarily have to be the best winner of the work themselves.
Yeah.
But as long as they've got their team capable of doing that, then, I think these days, do you call it a partner? Do you call it a leader? It's a changing nature of some of that.
But do you still expect, like, for example, when you became a partner, was there an expectation before you become an equity partner, you had to have developed your own client base?
Yep, absolutely. Yeah, and we still do that today. Absolutely, for some partners in certain parts of the business, there's an expectation that, as I say, you can grow and position the firm. Has that changed in terms of the percentage of the portfolio? Yeah, absolutely. That these days, you might give a partner a better starting foundation of the fee base that they've got. And that naturally happens anyway. You've got succession going on in the business. As I say, as you grow new channels of the business, then it's necessarily not just growing traditional SME clients. It could be growing a specialisation that you roll out, to a client base. So yeah, it's changing all the time. Unquestionably, as a profession, we're going through a change that we've probably never seen before.
In terms of, I guess, hindsight, they always say hindsight is 20/20. What would you have done differently in your career, or even in the business as well?
Back in the late 90s, I've always had a flair for technology. And so I think, I was in maybe one of the first intakes in the mid-90s when the Institute brought out their IT chapter and the elective for the CA program. Anyway, I had a view that we could just get an IT consulting business up and running as part of back then Lawler's, and so come up with the whole concept of Lawler and all the bits. And I underestimated, what starting up a business of that nature and that is like. So I felt at the time, I was driving our other partners on, this is what it should look like and this is how it is and here's the opportunity and all that. So it was a really good learning experience. It didn't work. It was before its time. Thankfully, today we've got a really successful part of the business in that space. But what it taught me in hindsight, I would have back then done a lot more research into it. I would have surrounded myself with other people that had maybe more expertise in that space than I did. And I think what it taught me is, the importance, as I was saying before, from a partner or a leader perspective, it taught me the really importance of you don't have to have all the answers, but what you got to do is have the people around you that can help you get the answers.
Yeah.
Okay. And so for me, it's shaped how I have been as a leader. So I'm a very collaborative sort of approach to leadership, in that if we've got a challenge, sure, ultimately I've got to make a call at some point, but it made me realise I don't have to have all the answers,
Okay, and that's because I was actually going to ask you, how would you describe your leadership style? So collaborative is the answer?
Yeah. So I think very much collaborative in the sense of, being able to get the different views and perspectives, make sure that, people get heard, because one thing I've learned is we have a thing called think tank in the organisation that I implemented when I did take over this role, and it's just a chance for anyone to make an observation of the business and either we could do this better or here's an opportunity. And like, we've had some fantastic ideas come out of not the partners that have been implemented in our business today, that I just think, the more minds that you can open up as a leader, then you'll get the answers that you need.
Steve, have you always been like a leader? Like, are you one of those kids that were like a school captain, sports captain? Like, have you always had that innate leadership ability, or is it something that you've developed over time?
Yeah, no, look, without sort of crowing, in primary school, I was the vice captain. When I got to year 12, I was the school captain, captained a number of sporting sides. So, yeah, I guess, to answer your question, it's been innate in me from a young age. And even, my friends would say, I'm the guy that sort of organises the social outing or event, or, so yeah, it's just part of my makeup, I guess.
And do you find partners that like come through, they are of a similar kind of mold, like they're innate leaders, or is leadership something that you learn and you develop over time, through experience?
Really good question. I think that innately leaders have something in them, that they're wired that way to become a leader, Now, I guess the second question is, have we all got that, and it's just some switch it on and take advantage of it and some don't? Which is why, the Dare to Aspire is a really important thing in our Thrive and Lead, because I think too often what we do is we pick who we think will be the leaders, versus giving people an opportunity and exposure to the things that are part of being a leader, and then seeing which individuals' passion gets switched on and, etc. And so I've really seen that, Michael, out of our Thrive and Lead program and our fast track programs. It's amazing how many times, the person you think is going to be the next best leader maybe doesn't necessarily get there. And there's the hidden gem in that pack that suddenly...
Interesting, really?
Yeah, absolutely, yeah.
So you still get surprised even these days?
Yep. I mean,
what is it? Have you figured it out? Yeah, like, have you?
I just think
what it comes down to.
I think it's just some people have never been given the clear air and exposure to unlock what's innately in them as a leader. Whether that's because they're maybe historically have been a bit introverted in the way that they go about. Maybe it's they've always felt fearful because someone above them sort of is quite a strong leader, or a extroverted sort of person. But yeah, I think what I've learned out of these programs is don't just think that you can sit back and pick your next leaders, because I'll guarantee you there's a hidden gem in there somewhere. So.
Okay.
I'll give you an example. One of our best financial planners today, when he joined us, came as a chef. He'd previously been a chef. Jury was out in the first few months, but we gave him a bit of clear air by switching him across to another part of the business where there was capacity for him to really shine and or not. Became a partner, led the growth of that part of our business. Today's our number 2 or near enough to our number 2 financial planner in our group. So, whereas if you'd have said to me back then, is this guy going to be your next leader of what he is today? Probably not. Would have said no. So,
fair enough. What makes a leader a leader? Like, what are their attributes? Like, what makes someone a great leader? Well, I guess I can rephrase, like, what do you attribute to your success to?
I think, back to what I said before, good leaders have an ability to take people on a journey. They don't have to have all of the answers themselves. I think that's a big part of where I've learned. 2, I think, what comes with that is being vulnerable. You've got to be comfortable in a group to say, I don't have the answer, so that it opens people's mind up to helping you get there. I'm big on empathy. I think empathy is a massive part of leadership in regards to there's always something going on for people that you don't know. And so, as I often say to our people, people spend a fair chunk or the majority of their week at work. So if they've got something going on outside of work, it's a fair chance it's going to play out at work. So you need to be empathetic to this. Maybe isn't about work per se. There's something else going on for them. So how about, we try and understand the person and what's going on for them first before we sort of jump to conclusions about their performance is no good and those sort of things. Yeah. Resilience is a massive thing.
How do you like become resilient? How do you learn? Like, are there things that you've had to learn, Steve?
Yeah,
like,
sure. Yeah, absolutely.
Or have you just had all those attributes from day one and you never?
No. I think resilience and what comes with that, what I've learned is it's how you show up. How I show up each day can set the tone in many ways of the organisation and on a daily basis. Now, you might have stuff going on for you, that is nothing to do with the work. But as a leader, when you walk in that door, you've got to exude that confidence that everything's okay, And so I've learnt to do that, and that means keeping your emotions in check. 9 ways to skin the cat, as I was talking about before, and you've got to. And from a resilience point of view, my own approach is I make sure I take time out for me.
How do you do that?
I've got a property, a farm. It's about an hour from home. So if either things are, under pressure on a few things or something really important in the business that I need to give a lot of thought to and, get ready for a meeting with our partnership group or whatever, I'll be up the farm on the tractor doing the mind-numbing stuff for a period and just, do a bit of thinking.
By yourself or with the family?
Yeah, or both. Often if it's, if sometimes it's myself, I'll just duck up there and like Joe, my EA is fantastic. I'll say, Joe, just blocking my diary out for half a day, etc. So, but yeah, that resilience is you got to know how to show up as a leader. And
Steve, sorry to interrupt. How do you reconcile the whole resilience aspect that you just said, like show up as a leader and be confident, but at the same time, be vulnerable and say you don't have the answers and you don't actually know right now?
Yeah.
How do you reconcile those two?
Well, to me, it's being transparent. So it's being transparent about it all, and I think it's as you can be that as long as that's how you treat the people around you. So if to me, all these things sort of mix in together. If you're trying to balance up resilience and being vulnerable, then you've got to understand that in your team that will be the case, that you need to be empathetic to that going on for them as well. So for me, that's how I guess empathy for me is how I've balanced resilience and
have you always been like an empathetic person?
Yeah, I think so. Yeah. I've certainly I've always taken that care factor and reached out to people if I can. If I can sense someone's doing it a bit tough, I'm certainly not afraid to reach out and go, you're doing okay, or do you want to have a chat about things, or So yeah, I'd say, Michael, absolutely, empathy's a strong trait of mine.
Are there any incidences or leadership challenges that you like that really come to mind? It's like, oh, that was a really hard one. That was probably one of my biggest leadership challenges, or challenges as a partner, as a managing partner, that I've had to overcome.
Yeah, sure. We in 2015 we took a move to change our structure of our organisation. So we stepped away from the traditional partnership model, goodwill model, etc. At the time, we were 12 partners, 12 owners. So you can imagine, there's a whole range of views and what that should look like, and is this a good thing, et cetera, et cetera. So for me, that was a real challenge. I had a few sleepless nights there as we led up to where I was sort of going to put on the table, here's the model that I think we can go forward with. But at the same time, if I look back on it, it was sort of a really rewarding, reaffirmed a few things for me around 9 ways to skin a cat, So I took the time leading up to that to have a chat to various partners that, I knew may struggle with it, listened, had to be a good listener, vulnerable in some ways on some aspects of it, where that's where my collaborative style, I think, came into it. But yeah, it was a real challenging period because it was stepping away from the notion of our structure that had been there for the last 30 odd years.
Yeah.
2, it was quite a diversification away from what other practices of our scale and size are traditionally and still are sort of built on as a structure. And 3, ran the risk that things like collaboration and working together could sort of go the wrong way. So anyway, where we landed, touch wood, it's been a good journey since 2015 with that model. And
so what's your model now then?
So our model is quite a bit different in that what we do is the partners that run a particular area. So say the business advisory partners. So today we're 14 owners, at the head entity level. So those owners basically, if you're in business advisory, you get 100% of the profitability that comes out of business advisory, but you pay a royalty based on your revenue up to our head co, where the 14 of us sit.
Yep.
Then the 14 of us share that royalty equally. So it's a quasi mix of profitability being totally held by the partner versus all profitability being totally divided equally.
Interesting. What was the impetus for that transition?
I think if you look at most traditional partnerships, at any point in time, it's easy for partners to get a bit lazily when it's a treasury style partnership model. So we had instances of, partners not chasing debtors, yet that was okay because we had the treasury cash flow to make sure things kept getting paid, and wages and partners drawings and all those sort of things. 2, from a people perspective, I think there was an element of people abdicating their people responsibility to HR or others. So the model was very much about bringing back some influence where you could directly influence day to day over things like strategy, people, accountability, but not losing the nexus of partnership that we're in it together, such that, why should, if you just get 100% of your profits in an area, then the risk is you just look after yourself and don't worry about the rest of the business and introducing other parts of the business to your clients and the like. So it was coming up with a model that created that nexus of partnership, but made people accountable and rewarded based on where they could influence things more succinctly on a daily basis. And I've got to say, Michael, since we've gone there, our collaboration as a partnership group, and our cross referrals and our willingness to help each other out has actually gone up since that point in time.
But didn't you say each partner gets 100% of the profitability?
How
does
the
that
team? So if you're a unit, so say
Yeah.
business advisory might be made up of 4 partners. Those 4 partners share the profitability of that business unit.
Gotcha. But then how do you create the nexus between those guys and the other units?
Because the royalty gets paid into the head co, which is where those other guys also own, and that gets divided equally. So as a unit's going well, then the royalty is going up.
But between the units, the collaboration, what like otherwise the business advisor would just want to look after themselves
because they want to, if you think about it, they want to get the audit division going as well as it can, because if it goes better, then the royalty goes up that we all equally share in at the top. So the notion initially was that 75% of the profitability roughly gets shared by the partners that are in that unit. And 25% gets shared equally.
Gotcha. Okay. So
and we drove the royalty to achieve that outcome.
Because those 4 partners would also be as part of the ownership unit as well.
Correct.
Okay. But when you say there's no goodwill model, there's still an equity model though, like you have to buy into the partnership.
Still an equity model, but it's driven more by that profitability as you would value up a commercial enterprise. That profitability at an EBIT multiple.
Yeah, so that's the same aspect. It's not like there's still an equity or goodwill aspect though.
Yeah.
Okay. So I thought you changed it completely where there's no more, because like I have some clients or firms that they've gone away from that goodwill completely, as in like if you want to become a partner, there is no equity as such.
No, we haven't gone. We've certainly maintained that equity piece as part of making attractive for both succession in and out. So.
Yeah. Okay. What's your message to like young accountants coming up, through uni and looking to get into accounting? Like, is there skills or things that they need to be doing or looking at to succeed these days?
Yeah, look, a couple of things I think. One is, don't sit back. If you want to go places and become a partner and look at maybe doing a different sort of part of, if you're in advisory and you want to go into audit, I think too often, people sit back and wait for the tap on the shoulder, for that. So I think if you're passionate about something, then make it known to your partnership group, make it known, amongst your firm, because, often it's people, where you get that misalignment is there's a breakdown in the communication, right? Is that people leave because maybe someone doesn't understand what they really wanted, or they felt like they never got heard, etc. So I think, being willing to put it all out there is okay, is the first thing. I think the second thing I'd say is, as you go through your career, the best that you can do is really maintain that adaptability in how you go about things. So, if whether it's looking after a client, whether it's, working with your peers, I think, the more that you're able to be adaptable, allows you to work more effectively and get places. And 3 is, I'd say, never, empathy is a massive thing, in building a trusted relationship. And if you think about what we do, we just build trusted relationships with clients and then provide a service around that. And so I think a big part of being able to do that is being empathetic to what's going on for the client and really understanding that, what's going on for your teammate, and really understanding that. I think they'd be sort of 3 tips. And overriding all that is, you've got to have the passion and the fun in doing what you do. If you're not having fun in doing what you do, then you probably shouldn't be doing it, because you spend so much of your life doing it. To me, I've always been passionate and enjoyed what I do, and I think that sort of then plays out in the ability to go places.
Yeah. Okay. What made you guys join Like, there's a bit of context for anyone that doesn't know. Obviously, you guys used to be Lawler partners. I remember when we were working 10 plus years ago now, your approach was to expand the practice nationally and it was a federated model, basically.
Yes.
What are your views on the whole federated model these days after, you kind of went towards PKF and it's a little bit different now?
Yep. Look, I think the federated model works well. Absolutely, it's got its challenges equally. Certainly, what we've learned, I think, and even if I take PKF Sydney Newcastle, which, as you know, is the one firm, the reality is that the markets we deal in are different. Whilst what we offer and what we deliver is the same, the markets that we operate in, are different. And if you think about the federated model nationally, that goes that way as well. So what I find is the federated model allows us to be a bit more agile in how you might go about positioning the firm in those marketplaces and how you win clients, how you attract people, et cetera, et cetera. Versus, if we were do it one way that gets applied across all jurisdictions, I'm not so sure that, you would get the same outcome of success that we necessarily get. On the flip side, the challenges of that are then that when you're trying to get initiatives and activities and that underway, is equally you don't necessarily have the say over, what that firm does in some respects. So it's really that balancing act. But where we've landed with it, Michael, is that balance of agility and being able to position the brand. So we've got the consistent piece that happens at the top, but then being able to take that and say, how do you apply that into your market for best outcome? The federated model has served us well in that basis.
Okay, because you've got, how many offices have you got under your partnership? You've got Sydney, Newcastle,
and Central Coast.
Yeah.
Yep. And the rest are then Brisbane and Rockhampton are one organisation.
Yeah.
And then you've got Perth, Adelaide, Hobart, Melbourne, Canberra, Tamworth, Gold Coast.
And they're all independently 100% owned.
Yes.
Yeah.
Yep.
Okay. And obviously, I think we talked about numbers, like you said, prior to becoming PKF to now, I think the firm has doubled in fees.
Oh, absolutely. We're almost sort of triple, to be honest.
Triple?
Yeah.
As your partnership you're talking about?
Yes, as the Sydney Newcastle. So from, we've 2.5 times, we're certainly on the journey in the next...
In 6 years?
Yes. Yeah.
6, 7 years. Wow,
yeah.
great. What's behind that? Because it's a lot of growth from starting, from a big baseline.
Yeah, so PKF, we joined back in, just 14 was when we sort of first moved into the PKF Lawler and then, dropped the Lawler and so on. But what I think we've done over that time is we've added a whole lot of other disciplines, as I was mentioning before, sort of whether it's the technology, whether it's the PKF integrity guys, whether it's the move into the succession planning, a hospitality specialisation, those sort of things.
So mostly new service lines. New
service lines together with, a growth in areas like audit's been a massive success for us in terms of its growth. In that time, we've done some mergers, which has come into areas within our business advisory, our taxation. So I think, if we'd have just been on a strategy of organic growth, we wouldn't have seen the growth that we've had. So it's been a mix of organic and, acquisition merger activity that's gone on over those years. But and then from a national perspective, going back to your original point on, when we were Lawlers, I think when we first met, we started the journey of the Lawler National Alliance, which at that stage we had, Tamworth, Brisbane, and Perth, and had just had Adelaide coming in. And then out of the PKF changes that went on at the time with, the East Coast practice moving to BDO, we were just fortunate, that an opportunity came up. With that, we'd always maintained an international alliance, to help service clients that had activity going on overseas.
With PKF or?
No, when we were Lawler National Alliance, we had relationships with networks of accounting firms that, everyone maintained their own brand in those networks. Excuse me. Whereas PKF gave us an opportunity to come into a much bigger network internationally, take on a brand that had been well regarded both domestically and internationally. And so, we went through a process with PKF International and just negotiating what that might look like as a transition from Lawlers to PKF Lawler to ultimately PKF is where it went.
Yeah, okay. I mean, was there a benefit to you from joining, besides the international aspect, I guess, because you had the full alliance already nationally as part of Lawler?
Look, probably three main benefits. First is it certainly gave us a broader reach for our client base. Excuse me. So PKF in the locations that they were in, and probably the scale and size of some of the firms that we dealt with, that certainly was a massive benefit to clients, which was number one priority for us. Two, it gave us an opportunity from a people perspective to be seen as more than just the Lawler Group. So it allowed us to attract some players that maybe had been in other mid-tier or top four accounting firms, that started talking to us and coming to join us.
Just because of the branding?
Just because of the brand,
Wow.
And then three is equally, we got opportunities from PKF from both inbound work. So we've seen quite a significant amount of inbound work that we support PKF firms across the globe on clients they've got with Australian interests. That we didn't necessarily see that with the previous international affiliations. And four, it's certainly in aspects like audit and the like, it's, we've been invited to tender, just by virtue of people knew the old PKF brand and saw it as a reputable brand. And so it's given us opportunities domestically for work to be invited to participate in that maybe we never once did.
Has that been the main driver behind the audit growth?
No, not necessarily. I think it's come from a couple of reasons. One, we've certainly continued to attract quality people into that offering. Two, the technology investment we made, where we went into that space around, use of technology in the auditing technique, the tableaus and Power BIs that hung off that. Clayton Hickey, who is our partner that led that, to his credit, we've been on that journey for a while now, and it's proven to be a real value add to clients, as part of when we pitch. So, unquestionably, the brand of PKF has definitely assisted us in that space equally, Michael, to get opportunities that we wouldn't have got.
So, what are your goals now? I mean, you kind of is there anything left in your bucket list?
As PKF?
As PKF,
yeah. Sure. Yeah, look, if we look at our strategy, we very much want to position in this wealth transition succession planning space. So if you look at the demographic of our client, we are heavily geared to the SME market and believe that's a sweet spot for us, and we do that extremely well in when we talk about our advisory space. So we absolutely want to position PKF as a go-to organisation in each of the states in that space. To the digitisation, in terms of what E.G. Clayton's done in the audit area and the assurance area, we think there's a great opportunity to really leverage that out on a national scale. And we've to be honest, we've taken a lead on an international scale with a lot of that as well, in supporting other firms. So they're probably two really key parts of our strategy going forward. And three would be just generally, continue to position in our respective markets in that SME land, as a solid provider.
Okay. And are you still looking for like firms to join the PKF brand or to merge and acquire, etc.?
Yes. Yeah. There's plenty of that going on. As an example, our Brisbane and our Canberra offices have both recently just announced mergers on 1 July. Us in Sydney, Newcastle, we're in discussions with a few firms in other locations, that we're in, quite deep discussions about them maybe becoming part of it. And equally in the West, the Darren and the team in the West have, continually added bits and pieces of offerings that's been about attracting people across from other tier twos or whatever. So,
but essentially, it doesn't really affect you guys. Like you guys run your own thing, they run their own thing. They have their own culture. You have your own culture.
Yeah, but we working closely, so we're all bouncing off each other. There's different initiatives that we undertake together. So the audit guys, we have a number of subcommittees nationally so there's representation from firms in audit, advisory, etc. that do go and work on, whether that be pitching to groups to, undertake work, whether that be initiatives such as the technology development that then all firms can apply in their market. So whilst it's a federated model, we actually work, very closely in some of those initiatives.
The reason I'm curious is obviously, we've seen so much shuffling around over the last 5 to 10 years, whether it's Hayes Knight tried the federated model, PKF became BDO and then GT, etc. So it's kind of, does it really mean much? And, is it the best way to go about it, given that people just come and go and change the brand every single day?
Yeah.
That's what I was curious. Your views on it. Does it actually work, or is it kind of look,
we think it works, and I guess all you can go on is is it helping each firm grow? Is it helping each firm attract people? And we just finished our benchmark data for 2021, and all the firms report growth and all report that there's plenty of opportunity. So I think whatever that's happening and we're all working in together and on different initiatives and the like, then, there's no reason to change in the short term. So,
okay. Because have you had people that left as well, the PKF branch, since you guys became PKF?
In Perth, we had
in Perth,
So when we joined PKF Lawler, National Alliance had a Perth representation, and what was left of PKF had a Perth representation. And ultimately, the Lawler National Alliance Perth firm left and went to Hall Chadwick, I think.
So that's what I mean. Stuff like that. Why? What's the need to move around?
Yeah. Look, the challenge in Perth was having two PKF branding operations that were within, kilometres of each other. So it made it hard practically from how do you, when you promote and the brand and,
well, you have to merge, really.
Yeah, you either got to merge and or, they made the...
You leave.
Yeah, that's right. So
makes sense. Okay. What sort of impact has COVID had on the business?
Look, well, I think for all accounts, everyone would say we've become busier than we were prior to COVID, because the whole support of clients with, Job Maker, Job Saver, grants, etc. But look, we were always quite well geared to mobile workforce. We had a number of people that on flexible arrangements. Audit team were forever mobile, as were a number of our other teams. So what it's forced you to do is just change and adapt. So we've seen growth in COVID. We've had sort of a record year in 20, and then that became a better year in 21 again. So there's no shortage of opportunity. The biggest challenge has been for me, and my main concern day in, day out, is the people aspect. How are people coping? What support frameworks can we put in place? So we've done a whole lot of things around that to stay connected, to support those that are struggling, to still have some fun. Like I mentioned earlier on, you still got to celebrate your successes. And
what sort of stuff have you done? Because especially now, this is probably the longest lockdown you guys have had as well.
Yeah, we've done well. If I go back last year, we did sort of our virtual ball. End of financial year, we always have a big ball that we get the Sydney, Newcastle, Central Coast together, and the spouses and all that. So we had to adapt, and at that we always give the service awards. We recognise Employee of the Year, blah blah blah. So we did that in a virtual way last year. As best we could, so we've done things like that. We've done themed days, so we have Trivia Tuesdays. We have, wear your favourite rugby league shirt Friday. So what we've done is a mix of the teams themselves doing what they do to have some fun. And then we'll do the whole of firm side of things. We've sent out hampers with, we've run some coping with COVID with some different themes around that, where our EA provider has done some sessions that people can just freely join on a Wednesday. So you've got to, it's about that adaptability, Michael. But, for me, the number one thing through COVID has been constant communication, make people feel like we're still in control, look after those that are struggling, and make sure we still mix up the things that have been part of our culture, which is, keep up our MD communiques every quarter, have some fun, some activities, and still reward people as they should be rewarded.
What do you do with those that are struggling?
A couple of things. So we've put in place buddy systems, in terms of where people can support people. We've done extra activity with our EAP providers around that. With
BAP providers?
EAP, Employee Assistance Program.
Okay. What does that involve?
So that's a third party where people can anonymously reach out to that provider that's an expert in, could be psych.
Basically psychs?
Yeah, psychs, or could simply, just be people struggling with, as I said, we've done some sessions with how to work effectively from home during COVID, how to give yourself time during COVID, so that's just general information sessions. So the employee assistance provider, our team can tap into that anytime they want. It's anonymous, all those sort of things. And then most importantly, what we've done is to our leadership group is said, make sure you stay in regular contact with our team. So pick up the phone, have a chat to them, get on Teams, have a chat to them. We've done a lot. Our business management team, last year when COVID first hit, we met weekly around what are we doing, and just, as you transition into that period of working from home and the like. And then we've continued that now. We don't need to meet weekly. We learned a lot from last year, but we've still got those frameworks in place of just making sure that people are looked after, checked in on, have access to specialists as they need them. And the mix of fun's been, I won't underestimate the mix of the fun activities we've done during COVID as well.
Will anything change once lockdown's over and things, do you anticipate things going back to normal? Or will you be changing your structures and frameworks and flexibility arrangements?
Look, we've always been quite flexible. I think what you will find, and we're okay with it, is a number of people will continue to do the mix of work from home and get back in the office. It's been really interesting. Last year when COVID hit, I think everyone sort of after a month or 8 weeks went, oh, how great's this working from home? And that was good for a period. Whereas what I'm seeing this time around is people can't wait to get back to the office.
Yeah, I'm seeing that as well.
Yeah,
it's interesting.
yeah.
People actually look forward to going back. Maybe they all say look, I'd love to have the opportunity to maybe work 1 or 2 days a week once in a while, but actually, I enjoy getting away from the family and just seeing my colleagues and having banter and just being out of the house.
Yeah, so absolutely. And I think, personally for me, when we come out of lockdown last time, I maintained working from home a day a week and still have done. And I'll continue to do that, as have a number of our leaders. And I think while ever that's happening, that's people can see, well, we're all in it together and it's okay to do that. And so I think going forward, people will, 1, take the opportunity to do a mix of work from home and in the office. 2, I think, people have seen the ability that necessary things don't have to get done between 8:30 and 5. So I think you'll also see that flexibility that we'll maintain in terms of start times, finish times, of that nature. So I think generally there's a whole lot of learning that's been good for business that's come out of it.
Yeah. Okay. Well, what about what's your end goal?
End goal?
Yeah.
Good question. So I took on the chair of PKF Australia in March off the back of Norm Draper's retirement.
Yeah, right about that.
We took that opportunity structurally for the first time to appoint an independent CEO. So Peter Cannon joined us as CEO. Yep. And so I think going forward, that chair role for me, working with Peter from an Australian perspective, is part of where, I've got some aspirations of what we can achieve with Australia, as I alluded to before, in some of our key strategic outcomes.
Yep.
So for me, I think, for us as PKF Newcastle, succession is important in any business. I've been quite transparent with our partners around that, I'm not here till the day I retire as the managing partner. I think, in the next 12 months probably makes sense for the timing of someone else to step up into that space. And, me with Australia, and I sit on the international board now for PKF as part of that. So, look, I think, onwards and upwards, as they say, and it's always good for an organisation to have that replenishment of thinking and ideas. So, but I'm not going anywhere. My resume will still say PKF when I pull up stumps.
So basically, you're going in Terry's path. Basically, stay until you're 70 plus.
I don't know if it'd be 70 plus, but but no. Look, I enjoy it. I love what PKF offers, both domestically and internationally, and good bunch of people that really work well with. So I've got no aspirations to move on outside of PKF.
How do you have you balanced and kind of kept your energy and motivation and drive with all the things you've achieved, like a really fast growing big brand, a lot of change, etc. Because you also have young kids, or had young kids, throughout the time.
Yeah, they're not so much young anymore. So the oldest is he's 21, and the youngest is nearly 15. So and one in between. But look, it comes back to passion and fun. Like I got to say, I've just always, whatever I do, if I'm not passionate about it, don't do it. That's the reality. So if ever I woke up one day and felt that the passion was gone and I don't enjoy this anymore, then I'm sure I'd change. But I'm a glass half full sort of guy, Michael. As I think over the years we've sort of dealt with each other. I just think life's too short. And as I said, losing my nephew, I think those sort of experiences give you you get two choices in life, right? At that point in time, where you can feel sorry for yourself and the like, but as a whole family unit, we looked the other way, and for all the tragedy that it was, we've set up a foundation. We've got a house that for families that are going through the same thing, having their kids, treated with cancer treatment, can stay there or have a holiday there. We've bought a motorhome that those families that are struggling financially as a result. So I just think my attitude's always been life's too short, so you might as well enjoy it and do something that you love while you can, and what you don't enjoy doing, don't feel false about trying to pretend that you're enjoying it. Just be authentic and do what you love. So.
Okay, but do you structure your day in a particular way, or do you work crazy hours? Like, have you done it?
No. I'm a very structured person, so my diary will represent my life if ever you looked at it. So right from what's involved from PKF Australia, PKF Sydney, Newcastle, my own time for exercise, activity, getting up the farm, holidays, it's all in my diary. So if anything ever happened to me, my wife would be easily pick up the diary and know what's happening, So
like, do you wake up are you one of those people that wakes up at 5 and sleeps 4 hours, 5 hours? Like, what?
No. Oh yeah, I tend to be weekdays. I tend to be in bed by 9:30, 10. I'm an early riser, absolutely. So get up and either exercise or get into the office, depending on what's going on.
Like at 5 in the morning, or
no, I wouldn't. No, probably 6. Is when. So I'm awake and up before that. But in terms of starting an exercise or starting to get the workday going, 6 o'clock. I like to be home each night and have tea where I can with family and sit down and that was that was a challenge when I first took on this role. Absolutely, and the kids were young, so. As I always say, my wife's my rock, and she's been instrumental in where I've got. But these days, it's a whole lot easier with the kids being older and the like. And the role that I've had, it's allowed us to travel a bit as a family. Whether that be tacking on to a PKF event or something domestically or whatever. But very structured. I'm very much an action plan person, that I write down what needs to be done and, forever cross-referencing that to make sure I've done it. So, yeah.
Okay.
It's my style.
I'm conscious of time, so let's do some rapid fire questions.
Sure.
What's your favorite quote?
Tell them they're dreaming. Out of a famous Australian movie, The Castle, which I've watched many times, and I think epitomises just the traditional Aussie family. So,
love it. Do you use it very often? Every time a client asks you for something, or
No. I've used it if we're looking at acquisitions or mergers, and a silly price gets put on the table. I'll often say, "I tell them they're dreaming. We'll move on." So.
What's your favorite book?
I read a couple of last year, I think it was. Michelle Payne's book, the jockey, the first female jockey to win the Melbourne Cup. So
I haven't come across it. No.
Yeah, it's called Life as I Know It. It's a really good read, and I think sort of big family, tough upbringing, lost mum at an early age, brothers mentally incapacitated. Yet she, if you talk about things like resilience and passion, and still, looking at the positive side of life and achieving, I found it really good, and they turned it into a movie. So, Ride Like a Girl. You might have heard the movie Ride Like a Girl.
Right? No, I haven't. Well, yeah. So that's your favorite book?
Yeah, well, it's one of the favorite ones I've read. So,
okay.
I only tend to read when I'm on holidays, but. Yeah, really, I think epitomises life in terms of, we all get challenged and we all have ups and downs, whether it be family and or work, in her case as a jockey. But you can look at it two ways and, feel sorry for yourself, put your head in the sand, or get on with it and go forward and achieve. So,
do you do a lot of in the office MBTI stuff and disc stuff and believe in that?
Look, we've done it historically. We still do it, in parts. I think it has its place. I think, you can run the risk also of pigeonholing someone just because that's what it says they are. And I think on any given day, in any given moment, people sometimes can shift between what their profile will say and what happens depending on the moment. So,
what's your profile, out of curiosity?
Extroverted, absolutely. Trying to think. I haven't looked at it in years, Michael. It's been a long time since I did it. Trying to think what it was. Yeah.
So it's not a big part of your kind of leadership development aspect that you look at. Okay.
Yeah.
Because I know some places put so much of focus on it. Some people don't really.
Yeah. The main thing we look at, again, we've built into a few of those programs, is building off people's strengths. So what are your strengths? And if you understand that first individually, and then we can leverage that, then, everyone's heard of the term playing to strengths. I'd like to think that we try and aspire to that, in our people. And, I think the risk in the profession, becoming a partner, historically, you'd try to say everyone's got to be the best at every part of that. But some partners are strong in people, some are strong in business development, some are strong in technical, et cetera, et cetera. So it's how you play to those strengths. What's
something that most people don't know about you?
Well, I've probably got to share with you before. I love the farming life. So
what do you have on your farm, by the way?
I've got cattle and horses. So I love nothing more than, putting on the hat and getting on the tractor, or getting the cattle in the crush and, looking after them. And so, probably not a lot of people know that, but I'm outside of dressing up in a suit and tie each day, then my weekends I'm very differently dressed, and my activities are nothing like an accountant would be. So,
were you raised on a farm?
No, I wasn't raised, but always had extended family and friends that came off farming life. So spent a lot of childhood helping those, on the farm and riding horses and those sort of things. So always enjoyed the outdoors and that sort of activity. So that's obviously stayed with me.
Do you have someone that helps you run it and manage it, or is it kind of just whenever you get there, you get there?
No, it's been good actually. My dad's retired, so Dad often gets up there, and my sons love it. So we've often had days up there where the three generations are up there doing something together, and you can't buy that back, to be honest. So.
How many horses and cattle do you actually have?
Normally, I run about 24 head of cattle,
Yeah.
and I've got 2 horses. But in the recent years, when the drought hit, I sold off, and the prices have gone through the roof. So trying to buy back in at the moment. But all the restockers, post the bushfires and the drought, the big guys have just been buying as much as they can. So the prices are just through the roof, and year-on-year records for the last couple of years.
It's interesting how many partners I know that have a farm, like a hobby farm,
Yeah,
basically.
okay. Yeah, well, it's sort of the total opposite of what we do, right? So
yeah,
it's just I just find it as much as you work hard, like there's a lot of physical activity with it, but you also get to do a total different set of thinking. But equally, as I said, earlier on, sometimes I'll go up there, jump on the tractor if I want to think about something around work, just to follow the line on the tractor and think. So,
you just literally ride it around, or does it?
No. Actually, slash the grass. Yeah.
Okay.
No. So, yeah.
Who would you want to have a drink with the most in the world, past or present?
Probably into something else. But I'm an avid V8 supercar fan, so always have been. And I've read Peter Brock's book, which
Yep.
It's a great read as well. But I would have loved to have sat down with Peter Brock and shared a beer. And I just think he's that quintessential Aussie character. Seemed like a real sort of professional in absolutely what he did, racing. But just that knockabout sort of guy that could relate to any age group, and always gave time of people around him and the fans and that. So having read his book, I thought, geez, it would have been good to sit in a pub one day and after a race and sit there and have a good chat with him about life in general, and tragically he got killed, as we all know. But he's probably someone I'd definitely...
What would you ask him?
Well, I'd probably ask him a couple of questions. Probably the first question I'd ask him is, what drove you to become so passionate and expert in his field? So why did he choose that field? When, from what I understand, he had quite a good engineering brain around motors, and so he could have went probably anywhere in that industry, But why did you choose the driving aspect of the profession as opposed to the automotive engineering aspect at large? Would be the first one. And two would be, if you think about what he did, it's a life or death decision-making point in a race to make a decision on, do I go that line? Do I pass that? Do I sit back? Do I, what was his sort of appetite to risk in terms of, how he then took on what he did on a day-to-day basis, so.
Yeah, okay.
Yeah.
No, I remember I was really into my V8s when I was growing up.
Oh, yeah,
well.
Cool.
Yeah, loved it.
Holden Meyn or Ford Meyn?
It's an interesting one because I've owned both. My first car was a Ford, so I would have to be a Ford. But then my third car was a Holden. So it was more following the drivers like Peter, etc.
Yeah, and then I think the final question I'd ask him is, given his popularity, how did he actually manage all that in the context of life in general? So I'd imagine he would not be able to have gone down the street or gone out to dinner and have almost everyone pouring over him at a point in time. And how did he actually manage that from a resilience point of view? And
the celebrity thing.
Yeah, the celebrity thing, and all the thing.
You would have that in Newcastle as well. Everywhere you go.
No, not at all, Michael.
Young accountants from University of Newcastle rushing up to you asking for signatures.
No, not at all. and I'm quite happy with that.
Steve, thank you so much for your time. It's been an absolute pleasure.
Yeah, thank you, Michael. Really enjoyed it, and let's catch up again soon.
Thank you for tuning in, and hope you enjoyed this episode. Please like our podcast and share it on LinkedIn, Facebook, Twitter, wherever it is you hang out, so more people can benefit from these speakers. Also, please subscribe on our website so you get all of our latest episodes. And if there's anything else I can help you with, or you have speakers you'd love to hear from, or some feedback about the current episode, please feel free to send an email to michael@recruitmentexpert.com.au. Until then, Take care, and I look forward to connecting with you in the future.